So what we're going to be looking at today is financial instruments. So it's quite a large topic, or it could be quite a large topic. We're not looking at the whole, like every single financial instrument there could be, or the accounting for every single financial instrument, because we'd be here from now until pretty much the end of the year if we were going to do that. So we're looking at very specific parts of financial instruments and trying to really get to grips with what they are, especially around the derivatives that we're looking at, and then not just what they are, but how we account for them. So why the accounting for financial instruments is problematic, how we define financial instruments, how do we account for financial instruments, and how we account for hedges. And not even just how we account for them, but what they are. Financial instruments are a pretty complex area, and it's complex because, you know, and some of you guys may well go out into this space. You got really well-paid, intelligent people working on ways to make money for these various institutions and figuring out ways to basically finance operations to make money on things, and you end up with some really complex structures in place, and the accounting for that is really difficult, let alone the actual structure itself. So the accounting is always going to be, and the regulation behind it is always going to be a little bit behind what's actually going on in practice, because regulation takes time to react to what is going on. And that's not just in accounting and in terms of financial reporting, that's across the board. It takes time for regulation and for laws to catch up with current practice. So if you imagine kind of some of the privacy and sort of intellectual property / copyright type issues going on in relation to the internet and how easy it is to get access to things and to transfer things around. I mean, the law is still trying to catch up with what's going on there. So it's not just in this space where there's an issue. Backing out of the content for a second though, there's a really important aspect to what we're going to do today and how that relates not just to today's stuff, but also to the stuff we did last week, to the stuff for next week, which is there's what actually happens, there's the economic reality of, get rid of that. There's the economic reality and understanding the situation. So it's understanding for today, understanding what the financial instruments are, what they actually do. So it's understanding what the hedge actually is. It's understanding how forward contracts and options work. So there's an element of understanding the actual thing which is going on. And then it's understanding the accounting which lays over the top of that. Now, it's really hard to understand and sort of to get to grips with how to deal with the accounting for it if you're not too sure what's going on with the actual thing itself. Because then it's just trying to basically learn kind of you debit this, you credit this, and when we throw you a curveball in an exam, which often tends to be the case, you're not quite sure what to do with it. But if you understand the economics of the situation, then it's much easier to deal with how you actually deal with the transaction. Because look, at the end of the day, accounting is just a model of reality. It's just saying, here is, so a company like Woolworths, it sells $1 billion worth of stuff a week. Like, that is a lot of sales. And if you had like each individual item they sold, if you had sort of breakdowns of things, you'd have a report, you know, thousands of pages high, and we don't have that. We've got a report which is, you know, fairly concise in nature, because we don't really need all that detail. It just, the accounting models what's happening there. I would say, I know in the day lecture we had a supporter for them. Anyone follow the EPL and is a fan of Chelsea, not of Chelsea, of Liverpool? Because if you'd been paying attention, and I don't follow it all that much, but colleagues of mine do. But obviously Liverpool were in a pretty good situation to take out the Premier League. With what, 11 minutes to go, we're up 3-0, just had to close it out and somehow ended up drawing the match. But what I'm getting with that is, if you just look at the model of that match, 3-3 as a scoreline tells you at least something about that match. It doesn't tell you when the goals were scored, it doesn't tell you if the match was a good one or a bad one, it doesn't tell you anything about, you know, the importance of the match, but you get some level of information about what happened. Doesn't tell you about the full 90 minutes of what went on. Same for you guys. You know, in a year, 2 years, whenever it happens to be, when you guys finish here and get your piece of paper and go up, and there's graduations going on at the moment, cross that stage, get your piece of paper. And a lot of people say, oh, it's, you know, just a piece of paper, but that reflects the 3 years or the 4 years or the 5 years, however long it was, of you spending 6 o'clock to 8 o'clock, 6 o'clock to 9 o'clock, coming in after work, doing assignments, staying up late, listening to people like me rabbit on about accounting and whatever various other topics you do, the effort you put in for assignments, that all gets modeled down into just a line of 24 or however many subjects that you do, and you get a mark for it. So it's just a model of what goes on, and that's what the accounting is. It just is modeling what goes on in the complexities of the company, and it naturally simplifies it. So to give you an idea of just how important this issue is, and this graph is a little bit old, it stops at mid-2011, but what this is, I suppose, the outstanding amount for total over-the-counter derivatives. All various types. We're not even going to come close to looking at all of them, if any, only a few of them. But what you can see is quite a substantial ramp up over the years. And we're at a stage now when there's 600 to 700, and this is going back 3 years ago, 600 to 700 trillion dollars of outstanding derivatives out there. Now, what I want to show you next is, we throw around words like trillions, we talk about billions. Christ, Woolworths rounds things off to the nearest million. Like $100,000 is a rounding error for them. So I think just to get some idea of the numbers that we're talking about, I just want to show you a little something. You may have seen it before, and if you have, just feel free to zone out for the next 90 seconds or so. But just to give you a sense of what the realities of what we're looking at.